Hey everyone, this is Jibril for the SPX Ninja. Today is Thursday, July 19th, and I am looking at the S&P 500. Now, I want to go over the bigger picture before I delve into the shorter term. And as you guys know, I have two scenarios that I'm following, and I'm giving the preference to the more bullish one just because this market has been more bullish and it's just working out better that way. But let's just take a look at the two scenarios. One is that we have a wave forward that has finished, and we are on our way to a rally out of that. And it could be pretty big going into the 3000s. All right. And it is basically tracing out the steps, albeit it's slower than I would anticipate. So even though I'm giving this a little bit of preference, I would say it's like 51% preference to this one and 49% to the other one because I'm really not sure which way it's going to go from here. But looking at some other gauges, I might be able to figure it out. So we have this advance, but it's slow. Also, we have a bearish divergence against the advancers and decliners, and also we have a negative seasonality coming up. I think August and September are the worst months for the stock market. So perhaps it might be more intelligent to give heavier weighting to this one. And this scenario, what I'm saying is we have a wave A down, a wave B, which is a very complex sideways move, and then a wave C. So for wave B to complete, I needed it to go above this point here, which was around 2800, which it has done so, and it does look like potentially an ending diagonal. It could go a little bit higher from here, but it's possible that breaking above that 2800 was enough to complete this wave C of wave B, and then we can start moving down to the final leg of a wave C, which measures out to be in the mid 2400s. If I measure the length of wave A, and compare that to wave C. So that's my second scenario. And with if I put the bearish divergence, the seasonality, and the slow move of this upward trend together, I would say that that is potentially a more likely scenario at this point. Again, I'm very very close to saying it's either one, so maybe it's just better to wait it out and see which way the market starts moving. Let's drop down to a lower time frame. This is the 5-hour chart, and this is fully bullish at this moment. However, if you look at these peaks on the MACD, we have the peaks are diverging bearishly. So each peak had gone up with less momentum. So even if you take the bullish case, we probably get some sort of turn back down to. Hold on, let me bring this out by itself. Okay, so we had this 5-wave up rally, then we broke below this channel, which is kind of giving me an indication that this may have finished, although we did make a higher high, but that's okay. That's still allowable in a irregular flat correction. So we possibly had a W and X now, and then the next move would be Y. So that would take us down to 2770. So in either case, the bullish or the bearish case, I am expecting some sort of pullback now as the steam is running out. Of course, all of this can be erased with another powerful push upwards, but I can't predict that right now. My prediction can only be what the chart is showing me, and the chart is showing me a pullback to at least 2770, and we will judge by the way that the pullback occurs if it's just a pullback to 2770 or if we have a bigger breakdown coming as per the bearish outlook that I showed. All right, that's what I have for today. So I might go short today, and but I will look for more signs from the market. All right, so that's what I have for today. I will see you guys tomorrow. Have a great day trading.